In this session, we would be discussing the summarization in single entry system. So remember, in single entry system, we have only one effect of the transaction that is getting captured. When we say there's only one effect of the transaction that is getting captured, what is happening is we cannot follow the accounting process of recording, classifying, and then summarizing transactions. The traditional process, the traditional system that you have with respect to recording, classifying, and then summarizing, that you cannot follow in single entry system. So you have to forego that. You have to bypass that. However, being a business, being a firm, it's still important, or it is still mandatory for you to recognize and capture the details of the transactions that are carried out. So you have to figure out the profit position, you have to figure out the financial position, all that is still essential, all that is still needed. Then how do we go about with summarization in the case of single entry system firms? So let's talk about let's talk about the summarization process in general. Over here, the firm has got certain challenges when it comes to the preparation of final accounts. Now, what are the challenges the company faces? The challenges the company faces is that the conventional accounting process cannot be followed over here. The process of recording, classifying, and then finally summarizing transactions, that you cannot follow over here. Next thing is that the transactions here, it is incomplete. Because it is incomplete, because you're recognizing only one effect of the transaction, usually your records are incomplete in nature. So let's talk about an example of purchase of motorbike. When you carry out a purchase of motorbike in double entry system, you will have the transaction capturing the effect of outflow of money. You will have the transaction capturing the effect of inflow of the asset. However, in single entry system, the drawback is that either you will be capturing the outflow of money or the inflow of the asset. Both will not get captured in the case of single entry system. So we cannot go about with the conventional accounting process of recording, classifying, and then summarizing. And then, as a part of a summarizing process, where we go about with respect to preparation of trading account, final profit and loss account, and then balance sheet, that cannot be followed over here. So in place of all that, you will have to prepare certain special statements. You will have to prepare certain different types of statements. So that is what we will be discussing as a part of this session. So when it comes to summarization in single entry system, there are essentially three steps that we will follow. Okay, there are again three steps that we will follow. Step one, we will be preparing what is called as statement of affairs. The very first step that you will be carrying out is that you would be preparing statement of affairs. That's the first step. Second step, what you would be doing is you will be carrying out preparation of a statement, which is called a statement of profit and loss. The second step is that you will be preparing a statement, and the name of that statement is statement of profit and loss. Final step, or the step three, is revise statement of affairs. The final step when it comes to summarization in single entry system, you will be preparing revised statement of affairs. Now let's talk about summarization in single entry system once again. So step one, we will be preparing statement of affairs. Now statement of affairs is prepared to estimate the opening and the closing capital. The first step, we will be preparing a statement, and the statement is called a statement of affairs. And the reason why this statement is prepared is because you are planning to estimate, you would like to estimate what is your opening and your closing capital. Step two, you will be preparing statement of profit and loss. The second step that you will be carrying out is that you will be preparing statement of profit and loss. Now, this statement is prepared in order to understand your profit or loss position. You want to know what is the profit position of the firm, and that's the reason why you're preparing the second step. Step 3, you will be preparing revised statement of affairs. Okay, step 3, you will be preparing revised statement of affairs. Now, this revised statement of affairs is prepared in order to estimate the financial position of the firm. So these are the special statements that you will be preparing as a part of your preparation of your uh, preparation of your final accounts in single entry system. In single entry system, what happens is there are some special statements that you have to prepare, and those special statements are the ones that I just mentioned. Step 1, statement of affairs. Step 2, statement of profit and loss. Step 3, revised statement of affairs. To go on or to move on, to give you one further piece of explanation, statement of profit and loss, the second step, the second statement that you prepare, the statement of profit and loss that you prepare, this would be equivalent to the income statement. Okay, this would be equivalent, or this would be the same as the income statement that you prepare in the case of double entry system. In double entry system, remember, we prepare profit and loss and then trading account as a part of income statement. That this is what that would be equivalent to. State the third step, revised statement of affairs, we are preparing uh, to understand the financial position of the firm. So this third step that you prepare, that you carry out, this would be equivalent to the balance sheet that you're preparing. So this is how we go about with the summarization in the case of single entry system.